Canadian investors are using ZSP over any other ETF for exposure to the S&P 500 index. Institutional investors, investment advisors, and DIY investors have all been trusting ZSP with their investment dollars since the fall of 2012. ETFs provide instant access to a portfolio of stocks to an investor in a single, cost-efficient trade. For an investor to own the entire index would require institutional-level trading systems and expertise. To accomplish this, an investor would have to buy 500 stocks at a time, and then as the market moves, it would constantly have to rebalance those 500 stocks several times a year. ZSP simplifies this process by aiming to provide instant access to the 500 stocks in the index in a very easy and low-cost way.
Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble. Welcome back to Loonie Hour, episode 142. As always, joined by the three amigos, Keith Dicker, Boomer, Icecap Asset Management, Rich Diaz. You got a NASA shirt on? NASA?
NASA. Yeah, man. I love space.
Big space guy.
I'm saving for low Earth orbit. That's my life goal.
What are you going? What are you going to do up there? Like what do you want to find?
I want to prove that the Earth is in fact round. I hear there's some grumblings about whether or not that's true. No, I'm kidding. I don't know, man. It'd be amazing. If they ask for volunteers for trips to Mars, maybe even one-way trips to Mars, I think I would volunteer.
Bring some golf clubs.
Yeah, it'd be amazing. Man, space is so cool. They've got the Hubble telescope. They've got the James Webb telescope. We've got all kinds of things. Elon Musk with his reusable rockets. I'm definitely into that kind of thing.
Well, I'm a huge sci-fi guy. So Mrs. Icecap and I actually met years ago because we discovered that we both, we're Trekkies. That was an easy one. It's like love at first sight when you find another Trekkie. And but I love, I was just traveling recently and Steve is showing me the Vulcan sign, live long and prosper. Anyway, but one of the movies I really enjoy, I like to watch movies multiple times if I like it, but I just rewatched the movie Gravity with Sandra Bullock and George Clooney. So from a cinematic perspective and production, two people in the whole movie, that's it.
Yeah,
just two, and they're in outer space the whole time. Rich, you will if you haven't seen it, spend some time on it.
I preferred Interstellar.
Interstellar was good.
Yeah, I like the Gravity one better. My favorite scene, of course, is when, she's stuck in, I think, the Russian tin can floating through space, and Clooney just knocks on the door and crawls in. I thought that was a bit funny. But my other favorite movie is the one called Passengers, when
I've never saw that.
Yeah, I forget the guy. I always say he's the guy from Moneyball, but he actually did much bigger things.
Guardians of the Galaxy, I think, right?
Yeah, that's what he's known for. But I line him up as like the 15th most important person from the movie Moneyball. But he's traveling his whole life on just one jet plane, one jet. Yeah, good luck with the whole space thing, Rich. Let me know how it makes out.
Just start a GoFundMe. Get this man to space.
Yeah, that's such a good idea. I'd love that.
Loonie Hour, GoFundMe. Well, you guys watched the Oilers game?
Yeah. That was kind of sad.
That was a great, the outcome wasn't what a lot of people wanted, but what a great run. What a great time for everyone involved with the team and following it. And hey, right? The result didn't come there, but it doesn't matter, right?
A lot of good Canadians on Florida, though.
Yeah.
Paul Maurice.
I love him. I really like him. He's a great quote. I thought it was cool.
He had a good Canadian speech at the end.
Yeah. I thought it was cool that Connor McDavid won the Conn Smythe Trophy. That hasn't happened since, I think, Reggie Leach was a skater winning the Conn Smythe.
J.S. Giguère.
No, he's a goalie. There's been 3 goalies and I think 1 skater, and the skater was Reggie Leach in 1942, I believe. But I
He
think it's
didn't come
cool.
out. He didn't come out and collect it.
Yeah, come on. That is such a fake controversy. Could you imagine losing the Stanley Cup and having to sit there with Gary freaking Bettman and be like, except I respect that he didn't come out. Screw that.
All right. Well, moving on here. We had a pretty entertaining week here, leading into the Canada Day long weekend, which I must add is one of my favorite long weekends of the year. So I'm looking forward to that. Nothing like sucking back a few beers and watching the NHL free agency on July 1st.
Yeah.
Boomer, you do that?
Well, I will be having some drinks, but I will not be watching the NHL free agency.
No, I just have Twitter up the whole day.
Yeah, no, we'll be doing something. Hey, before we get into it, I want to pass out a thank you to, I think the person's name is Kai Paget. I might be mispronouncing the person's name, but this person prepared for us a new rendition of the Loonie Hour logo. Is that the best way? Rendering. Here we go with the pencil. I think it's pencil art. It's not my world, so I know I'm butchering it. But wow, this thing was amazing, and so thank you for doing it, Kai. And reconnect with us. Rich has some ideas that he might want to put it in on a T-shirt or something. But again, the part of the community we have here at the Loonie Hour, it's fun. There's a lot of fun people out there, and it's just amazing every time we make a new friend.
And we're all just trying to get to space. But anyways, we have the Canada CPI inflation print. So there was a lot of excitement leading into it. Obviously, we've had some tremendous progress over the last number of months. Of course, the Bank of Canada cut in June and hopefully another one in July, and Canadians are all getting revved up. And then, we had a disappointing number. So Rich, I'll let you kind of walk us through that, but yeah, inflation printing higher than expected.
Sure. So let me just pull up the inflation consumer price index for May of 2024. Remember, it's always 1 month behind. So it was released on Tuesday, so a couple days ago, and it said the consumer price index rose year on year, up so to 2.9%, up from 2.7. So remember, prices are still rising. They were rising at a slower rate, and now that rate is reaccelerating. According to the according to Stats Can, the acceleration was due to higher prices for services, and longtime listeners will know where that comes from, but I'll get to that in a second. And then another one which was weird, which was cellular services. So there's always a couple. I mean, there's many items. I can't remember exactly how many, but there's like 60 or 70 items in the CPI basket. Obviously, some have bigger weights than others, but there's always a couple that pop up and down and sort of skew each monthly number. So you have to be careful. I think it was a couple of the ones that were cellular services. So we'll see how that plays out over the next couple of weeks. But that was ones that they highlighted. The other one were travel, tours, and air transportation. And it's actually interesting. The air transportation is interesting because the TSA numbers, so that's for the US, are just amazing. And so there's a lot of air travel, which is interesting when you think about the weakness of the consumer. So people are still traveling. So there's that. But and then goods rose 1.0 relative to the same rate as in April. So, but the real kicker, the contributor to rising inflation, rising CPI is services, and that services is from rent. And we've discussed this a lot. So services CPI is just under 5%. And that's so it rose 4.6, which is following a 4.2% increase in April. And we all know why the services are rising, and it's mostly because of this very, very stubborn rent component. So I mean, I'll pass it over to you guys, but it's really just more of the same. I think it's really kind of interesting that you're getting these inflection points, and that's what we think about when we talk about this business. It's like always the rate of change, so the delta, and inflection points. But Keith, before I go into why I think rent keeps going up, did you have anything to add?
No, not really. I mean, it was disappointing for markets, economists, policymakers, and I'm sure a few people in Ottawa were disappointed with the number, as Steve will tell us. But it's an expectation we've had here is that, I think all the easy gains in inflation that they've already been, earned or squeaked out. And, maybe 3% is the new 2%, but it's sort of irrelevant at the end of the day because someone out there trying to find a place to live, or they're really struggling with having discretionary income just to have fun with their family, and because more and more of it is going to buy food and other items, they'll tell you, hey, prices have not increased by 2.9%. They will laugh at you. So from a policy perspective, we'll get into that next. But the Bank of Canada, they did cut last month. And we had a couple of us really enjoyed chowing down on the Twinkies for that. And at the time, it looked like they were going to cut again next month. We'll jump into that. But this number is sort of
I think
made some people uneasy
maybe
and stalled up.
In a little bit here, maybe we jump over to the market odds and expectations for the next BOC cut in July, or whether that's September or what have you. But
Well, let me
Rich, I
just
just
finish
had a
up.
couple
Yeah. Oh, go ahead. Sorry.
couple interesting things I found on the CPI. So I think it was was it the month before where CPI came in lower than expected, and apparently that had to do with basically cell phone services. Being, and then this month CPI was higher than expected because of cell phone services. So it's I don't know what the hell's going on over there at StatsCan, but
Well, no, I can help explain that. I mean, the reality is it's difficult to calculate the price changes for hundreds, if not thousands, or hundreds of thousands of items. And I think what we often do is there's seasonal adjustments, which are basically model based. And I think I think it's important that we don't sort of get too hung up on the individual components, especially when they're relatively small.
Yeah.
And so that's that's my, I always defend StatsCan, and so there you go. That's my defense of StatsCan. But I think that for me, what matters is really the trend and the general sort of the central tendency, the direction I think it's going. And Keith is right. We are no longer, in my view, hovering around 2% or just below 2%. We are now hovering around 3%. And we've mentioned this before, so I think this is something we've absolutely gotten right. 3 is the new 2. That's for the headline number. Services used to be much, much lower, and now services are re-accelerating, right? So we bottomed in the middle of 2023, and now we're heading back up to 5. And services are the largest lion's share of people's spending. And it's going to be sticky because of labor market issues, deficit spending, rent and shelter, etc. So what was the other thing, Steve, that you said?
No, I think that's a good point. I think that I was going to chime in just on rents. Again, I think there's no perfect way to model CPI inflation, and I think we're getting into the semantics of arguing whether inflation's at 2.7 or 2.9 or 3. The reality is for the average person, the difference between 2.7 and 2.9.
Yeah, it's both.
I know. It's 0.2.
Yeah. But no one's gonna notice that, right? The reality is people just felt overall price levels have increased dramatically over the last number of years. That at this point we're arguing about a couple decimal points. The damage has been done. I don't know if you guys saw that the video that was going viral on Twitter. There it was it was an American guy who's that was shopping in Walmart, but he had I guess on Walmart you can just hit the reorder button. So he had an order in his Walmart account from 2019. And so he went to hit the reorder button just to see what would happen. And so basically the basket was $100 in 2019, and he clicked reorder and it was $400 today. Yeah. Which again, I don't know if that, again, not a perfect, but that kind of just summarizes the overall jump in price levels, and particularly for food, right? Which I think people feel the most. Rents, shelter, and food are probably your two biggest line items for the typical household.
And it's a great anecdotal story, of course, right? Because we were talking about decimal points, the Bank of Canada and all that stuff. But I no doubt that I think this guy's or it did go up to 400. I forget the starting point. I did see the video as well. But that's what everybody has experienced now over the last 5 years. And then you say, okay, has your income increased, 2, 3, 4 times? Yeah, right. I don't think many people are going to say, yeah, yes, it has. So, by default, you have less money available to do stuff with. And then you have the whole mortgage story, of course, on top of it. That's for people who are able to, afford to buy a home. Steve, I know we're joking around, but I thought you had a good chart there earlier showing the amount of income needed now in Canada, I think, to buy a home, or was it a different data point? I forget.
No, I do have a few more points though on the rent. So one of them was the CPI basket basically broke out the increase in rents as measured by the CPI basket. So they show sort of each province. So Alberta is leading the charge right now with rents for Alberta up 15.7%, again, according to the StatsCan CPI basket. New Brunswick, 10.3%, Quebec, 9.2%. The Canadian average is 8.9%. And then kind of falling down the list is Ontario, 8.4%. Here I am in BC at 6.7%. And I would just say, like, for most people's experience, like I can tell you, like turnover rents in BC right now are not going up 6.7. Like rents are flat. I mean, you're hearing all these stories in Toronto now, but like rents for condos in Toronto are like down from last year. So again, I think it's kind of the CPI basket playing catch up that I think the peak rent growth story is really a story that should have been told 6 to 12 months ago. Again, not to dismiss or belittle the impacts that it's had. I mean, clearly, Rich, what we talked about it the other week, 1.2 million people coming into this country on an annual basis. Clearly, that's had an impact on the rental market. And you've seen that push through into rent growth. And that's really what's delaying now the Bank of Canada from actually cutting rates further.
Yeah. Yeah, so I mean, you're right. I think that maybe it's my fault. I've spent sort of too much time harping on the rent piece, and I would say you're right. Probably 6 to 12 months ago, I think it was probably a much bigger story when it wasn't on the CBC or people wasn't on Twitter. I think we were sort of early to that, and but that's why I think it's important to talk about sort of the breadth. So there's two more pieces that I wanted to talk about. One is the breadth. And so when you just Google the CPI release or whatever, and you have it for May, and it came out in June 25th, you can there's a bunch of bar charts, and they split it out in food, shelter, household operations, furnishing, clothing and footwear, transportation, healthcare, recreation, whatever. And what I think is important to note is that all but two are above 2%, and they're all still close to 4%. So clothing is negative 2%. And household operations and furnishings is below, but you still have this breadth of meaning you still have a bunch of the CPI items that are still above target, and who knows going forward, but I think are sort of still increasing, and I think it's just something that Tiff Macklem has expressed before. I mean, 2 months ago before he cut, he said more than 50% of the CPI basket is still above 3%. And then he lowered that to 45, and it'll be interesting to see what he says the next time we hear him speak. So that's the first thing, the breadth. And the second thing is we always talk about the BOC's preferred measures of core inflation. And on page, I lost it now, on page 9 of the release, you can start to see, so what are they're common. So these are different models. There's a median CPI, there's the trimmed mean CPI, which is you'd knock off the extremes on the edges. So you would knock off rent, let's say, and you would knock off the telephone services because they're extremes and they fluctuate. And in the middle, you sort of see that measure of central tendency. And in February, it was 3.2, 3.1 in March, 2.8, and then 2.9. So and so that's where that breadth. This is why I think Keith is right. I think that we might see a reacceleration, and because it's very hard, it's easy to manipulate those headline numbers. It's much, much more difficult to manipulate, or for those extreme outliers to impact those three preferred measures of core inflation. And that's what I think they're probably worried about.
So what do you think happens next then? I mean, the next BOC meeting is what, July 20 what? Wait, I got it. I got it. Here, let's start it again. July 24th. How's that, right? Because we're a month away. Steve, you mentioned earlier, I think we have GDP number coming out tomorrow.
Tomorrow,
So
the day that you're listening this, remember, we record on Thursdays.
so it's already come out then.
Yeah, if you're listening to this right now, it's out.
If this was a sci-fi episode, wouldn't that be cool? We could
So we're going back to the future. Love that movie.
Marty.
Heath, is there on the Bloom tubes there? Is there like a forecast or a market expectation for GDP?
Well, I just found the go into the future button. I never found that one before. That's pretty cool. Sorry, you're looking for the estimate for GDP tomorrow? Is that what you're asking?
Yeah.
So yeah, they're looking for an acceleration. So for the year-over-year number, it'll be 1.1 is the estimate. And the monthly is 0.3. So yeah, it should be because remember the second half of last year, it was pretty weakish. Wasn't it overall flat if you push it all together?
Growth or CPI?
Growth.
We're talking GDP, aren't we, right now?
Oh, yeah.
Yeah.
GDP, wake up over there, NASA boy.
I think everyone would agree. Like of the three of us, usually I'm the one that's out in space. I'm sort of, ventured off. But Rich is already in space. Yeah, but GDP. Yeah, so it's the second half of last year for 23. Yeah, it was kind of flattish. So, you're going to get some cool base effects coming up for a lot of the growth numbers. But the estimate is for, it'll be 1.1.
1.1 with population growth growing at 3.
Yeah.
So on a per capita basis, what does that mean, Rich?
I got it. We're going down.
That's right, baby. That's right.
That's right.
So anyway, we have a full month before the BOC comes up, but they're like everyone else. They're only human, and you would have to think that the CPI print this week it took a bit of breath out of them. So Tiff was correct last time when he said enjoy the moment, because maybe he knew then, right? It wouldn't happen again. But we do have the rates,
You
the
forgot
probability
to mention
though for next meeting.
Christopher Freeland bottom ticked it again.
She did.
I forgot about that.
Every time she tweets someone's CPI, it's the bottom. Oh my god.
Yeah.
It's one of these cringeworthy moments, right? Like it's there.
For the sake of all Canadians, I hope she's right this time. But there's one more thing that I totally forgot, and we had mentioned it 6 months ago and then sort of forgot and sort of got away from it, which was the contribution to CPI by the interest rate rises, right? So if you raise interest rates, it increases your mortgage payment, and your mortgage payment is obviously part of your CPI basket. And then that contribution is supposedly inflationary. And I always push back on this. I don't know what the right answer is. However, on page, what is cool, I just noticed on page 10, you're starting to see that mortgage interest cost contribution, which I think peaked at 30%, so 30% year on year was the change, is now down to 23.3. And so what that's saying is that it now only contributed 0.8 on the month on month. And so that's kind of because it's all about the delta, right? So if you go from 0 to 5, you've got a big delta, you got a big change, and then you multiply that by that percent. But as we spend more and more time at 5%, the contribution to inflation of that interest component sort of melts away. And so I think it's interesting. We'll just keep an eye on that for next month, but we're down to 23.3, Steve.
So while we're kind of talking on the rent inflation, CPI, one of the things one of the threads I was wanting to pull on here a little bit was what's going to happen here moving forward on immigration growth, rent growth. It feels like we're kind of at this tipping point. Our again, good friend of the show, Ben Rabideau, was tweeting a chart from the Bank of Canada where we're seeing the unemployment rate for newcomers is actually rising much faster. So basically, newcomers are taking longer to find a job, which ultimately suggests the government, of course, has some room to slow the growth of non-permanent residents without causing labor shortages. So basically, in summary, we have more immigrants than jobs these days. And so you do have to wonder, do people continue to move here, 1.2 million people a year, if there's no jobs for these people? Have you seen some of those videos on like TikTok and Twitter and everything that's circling around where there's like 800 people lining up for Tim Hortons job?
Yeah.
I don't have the TikTok.
There's
Say no
a
to the
so
CCP.
there's another. I mean, it's sad, and I think it's something that Ben Rabideau mentioned. There's another angle to this, which sort of confirms that that there's sort of a misallocation of labor, which is what happens when you sort of invite people to your house willy-nilly. So the CFIB, which we haven't talked about in a little while, called the Canadian Federation of Independent Businesses. I got it. They do something called a monthly barometer, business barometer, and they ask people, what's affecting their business. Is it product distribution? Is it a shortage of inputs, which during the pandemic it was very, very high. Now it's very low, and it's like all these different factors limiting sales or production. And one of the things I think is really interesting, related to your point, Steve, is the shortage of skilled labor is still relatively high, but the shortage of unskilled or semi-skilled labor has basically crashed back down to its sort of, well, we're nearing its long-term average. And so, it's just, I think it's just another sort of wrinkle to this larger conversation about the skills mismatch and the labor shortages or not. And I think that was sort of an interesting little tidbit that came out this week.
I mean, for us, with our strategies here, at IceCap, we have the expectation that the probability of the economy rolling over in recession, we think is a lot higher than what, the Bay Street economists are saying and stuff like that. And because of that, we're positioned a certain way to, make money on it, right? That's the end of the game. But we're always looking for new data points, either, hard data that comes out and anecdotal and so forth. So what I'm hearing here now from Steve, both you and Rich, what we're seeing out there is that if it's now becoming more difficult for people to find jobs, and you know what, it doesn't matter if they've already been here or they're new to the country, it doesn't matter. The point is that it is now becoming a bit more difficult for people to find a job. We're also seeing the trend that, the growth in jobs, and Rich, you can correct me if I'm wrong. A lot of the growth in jobs right now is coming from the public sector, not the private sector. So things are grinding tighter and tighter. And then again, that just gives us conviction that, hey, that this view is still on that right track. It is trending in that same direction. So again, like you always treat every piece of news, okay, what does this mean? Do you ignore it, or is it confirm a view that you have for an investment strategy? Or is it telling you, oh, wait, I need to reduce the probability of this event happening and so forth? But right now for us, I mean, hearing this, it's just screaming that, yeah, we continue to go towards a potential, stressful event.
Well, speaking of that, one of the things that I think might compound that or get you to that thesis, Keith, that you're talking about, which is, more of a harder landing, is of course, unemployment. And, so we just talked about, there's more people coming than we have jobs available. So there's some loosening up in the labor market. Of course, Rich, I think the unemployment rate in Canada is already up, 100 basis points since it bottomed. I mean, still at healthy levels,
Yes,
of
sir.
course, but the direction is going in the wrong way. Now, one of those ones that I'm kind of flagging here, of course, I'm in the housing space, is what's happening in the construction sector. And so, we've talked about this a lot where, hey, if you look at housing starts, they still look okay, right? Housing starts aren't that bad, but that's because these projects take so long to get through all the red tape and bureaucracy, that once you start them, you got to keep pushing and you got to keep going. But ultimately, moving forward, pre-sales lead housing starts. And so what's happening in the pre-sale market? We had some updates here from in the GTA. So for the month of May, in the GTA, there was 539 pre-construction condo sales in the GTA. The 10-year average for the month of May is 2168. So we had 539 pre-sales in the GTA. The 10-year average is 2168. And just to pull on that thread a little bit more, so year to date sales for new home sales all across the GTA from January through the end of May, we're sitting at a record-breaking low for those 4 months. So we're actually 39% below the previous low, which was set in January to May of 2009. Of course, just after the GFC, in the midst of everything melting down. Today's new home sales are 39% lower than the previous low of in 2009. So, I mean, the writing is on the wall for that industry, which is once these housing starts become completions, the pipeline is going to be very thin. And so I don't know if
and
that's...
what's the chatter you're hearing in your network? Or is the stress level, hey, everyone in your world, it's a cyclical world, of course. But for people in the GTA in that world, are they shrugging it off? Because it's always a good time to buy, of course, in the real estate world.
I mean, I think what's happening now, right, is like, I mean, the GTA is definitely the epicenter of the housing correction in Canada, for sure. It's without a doubt. Right now, you just have like a lot of completions that are coming online, like all like the euphoria of like, 2018, 19, 21, like those are now completing, right? Those condos are now completing, and they're completing at a time when there's not a lot of demand. And so that's how allowing your inventory to stack up. So right now, yeah, we have like an oversupply of units. So, when you talk about future rent growth and rent inflation, like I don't think we're going to be talking about that 12 months from now. But I think we're sowing the seeds for the next crisis 3-4 years from now, because I still believe structurally you have an underbuilding of housing in Canada. And I still think, population growth is not going to keep running at 1.2, but maybe it runs at 400, 500, 600,000. And I still think even with those numbers, structurally, you have a problem. So, I mean,
But then but with those numbers though, you still have like a 4 to 5 year gap that you still need to make up with housing units, right? Like it doesn't, if we drop down from 1.2 or whatever that number is for population growth back down to say 400,000 or 500, I think people should realize it's not an immediate cure, for demand for housing, because you still have the 1 point something that came last year and the year before and the year before that. So we still have that mismatch, correct?
Yeah, I mean, I think I said, I just think a lot of this is kind of like short-term noise, which is, like the housing construction sector is going to take a huge hit, and housing starts, while they're more elevated today, are going to roll off hard. And there's going to be, I think right now for developers, the name of the game is just survive. People are just trying to get through. I mean, you're seeing all the news articles. There's a news article every day coming out saying, oh, this developer's gone into receivership and this project's no longer getting launched. And like, that's just what's happening. And so again, I always laugh because the government comes out and does all these press conferences about, these housing accelerator funds, and we're giving billions of dollars to cities. And it's like, well, doesn't change any of the math, unfortunately. So,
but Steve, how does that square with how does that square with the the monetary policy report of January 2024? So every quarter the BOC releases this very, very long and very, I think, good analysis of inflation and unemployment, blah blah. And then in box 3 on page 15, I'm looking at it right now. It said, strong population growth is supporting inflation rental prices. But the key measure on this chart 3A, if you guys are interested in, is that vacancy rates are basically at all-time lows. So vacancy rates basically normally were around 6%, and now they're now below 4. And so how does it square with like developers who, they're worried about their pipeline, they're worried about a new project, but vacancy rates does not support, ultimately does not support demand and does not support prices and pricing and make these
Yeah.
projects viable?
Not enough to make them viable. I mean, a lot of developers are just trying to, honestly, they're trying to convert projects to rental now just to keep the sort of lights on. And I think there's still some optimism in the rental market that, yeah, even with rent growth slowing or flatlining, that underpinning it, you still have a pretty strong rental market, low vacancy rates, pretty much across the nation. So.
Okay.
Yeah, I mean, I don't know. It's just funny because, like, you look at all these data points and you hear all these different stories. It's not really like a perfect summarization. I mean, all I can tell you is I think that the industry is going to continue to go through hard times. There's going to be a serious cleansing over the next 18 months. And which, Keith, I mean, I think is good. I think it's a natural cleansing cycle. We had a lot of euphoria, a lot of malinvestment, a lot of dumb money over this impeccable bull market that we've had over the last decade, and so it will go through I think a healthy cleansing, albeit it will be hard on a lot of people.
Yeah, I mean, like commies don't like to hear that because they like a flatlined economy, but it is, we move in cycles. We move in cycles with everything here. Market wise, it happens. Sports teams move in cycles. Politics moves in cycles. We're seeing a lot of that happening now around the world. And again, though, like from us, again, like from an investment perspective, I'll always say, it is what it is. But as investment managers, we can be insensitive sometimes. But you have to be insensitive in a world like it is right now to manage money and to say, hey, we think this market has potential to blow up. And if it does happen, we're going to protect capital here and then make money over here. And the more I hear these stories, what's happening, it's the same thing in Australia as well, and Japan, and all these, everyone has something a bit odd with it. But I think the visibility, it's more clear today, and people don't like to hear it because they know the visibility, what they can see, it's not very nice. It's kind of like, remember the old Terminator movie? Do you remember those movies?
Yeah.
I'll be
Yeah, those are
back.
good.
Yeah, I rewatched those there recently. It's again like a sci-fi kind of stuff, right? That's their theme today. But in one of the Linda Hamilton, one of the movies, like she could look into the future. That's what she was dreaming about, and it didn't look very nice. But they prepared for the future, Rich.
Did they?
They brought Arnold back in T2, because whereas he was the villain in the first movie, he was the good guy in the second movie.
Yeah.
They could look in, like you got that stuff happening. So visibility is good if you have it, both in the real world and the sci-fi world.
I don't know where that was going, but
Yeah, I have no idea. I have no idea.
Did I close it? Did I close it up well?
No. I'll wrap this up for you. But just
bad things can be good. Good thing.
Okay,
that's all it means, guys.
Sense.
Something bad happens in the market, you can still make money on it, and you have to be able to see it. That's all.
So on the last thing on like sort of the housing front to tie it all in, one other sort of variable, again, we've talked about the Housing Accelerator Fund. We've talked about all these governments changing zoning, and a lot of these changes kind of hinge on who's actually in power. And so I think we're actually starting to see a changing of the guard. We've got the all important BC elections coming up here in the fall. And so, this government here in BC has made all these zoning changes, forcing municipalities to update zoning and basically forcing through higher density. Of course, there's a decent chance they might not actually be in power. And so will the new government come in and reverse all that? Now we're seeing what's happening with the federal liberals, of course. We have to chat about that St. Paul's by-election where the liberals, which had held that riding for, I believe, 30 years, just lost it to the Conservative Party. Of course, that's making media headlines. And so, again, you start to wonder about these programs like the Housing Accelerator Fund and all of this. And like that, those programs might not even be around in 18 months. And so I think that's just kind of the nature of politics and housing cycles.
Well, didn't we get a new, are we allowed to talk about that? Or are we going to get in trouble? Do we? Because I thought it was really interesting that
the by-election?
results. Yeah, I thought that was.
Yeah.
I mean,
Let her rip.
Well, I listen. I don't know anything about Toronto St. Paul. I just thought all I read for weeks and weeks and weeks like, a couple of the insiders I might know, they were basically just gonna be happy to place a showing. To come within a few percentage points, but they were basically all the Conservatives were quite resigned to lose this by-election. So for them to win, mind you, by 600 votes or whatever, that came at night, Keith, right at the last minute. But anyway, I thought it was interesting that I think that's, I don't know, it was quite a resounding and upset, I think is what they would describe it as, right? I don't know much more than that.
There was a lot of cold and cruel people.
Yeah, that's just out of control. I
mean, enjoy the moment, guys. Enjoy the moment. So let's have an interesting. Let's go through an exercise here now. Let's pretend for a minute that the three of us are running the strategy side for the Liberals. Okay, so we're now not out in front, because those are the people we have doing whatever we want them to do, but we're behind the scenes. What do we do now with this? This has just fallen on our desk, like the strongest safe hold riding in Canada, which we should never lose. We just lost. So let's pretend, let's go through that exercise. Okay, what do we do next? It's the next morning, or it's Friday morning for people listening, Thursday for us. Rich is in space, so he can go in the future or the past. So I'll start it off with the question, okay, and then we'll have a little go around. Do you want to do this exercise where we?
Sure, far away, boomer.
Yeah. Well, because we already started it now, so we have to, right? Okay, so I'll say, okay, so first thing here, based on this, I think it's an extremely low probability that we as the Liberal Party can win the next election. So what month is it in 25?
October.
August. October. Okay.
I'm saying right now, so we get our full pension.
That's a good point. That's important point.
That was going to be my number one policy move. That was.
Yeah. Okay. So I'm saying right now, we cannot win. No matter what we do, we cannot win. So question to you and Rich, what should we do next? Do we just hold still and wait it out, or should we do something right now? And I'll give you my idea as well. We'll banter it about.
Rich, I have my answer.
Go.
I'm holding it out, baby. I want that full pension. Don't move.
Okay, that might be difficult.
Yeah, I have a genuine thing. I think I'm gonna pack the courts with as many judges as I possibly can that will promote and try to protect my ideological bent. Pass laws that I think will be very difficult to remove later on. Those are the two things.
Well, you're just basically suggesting you're gonna go scorched earth on these guys.
Yeah, for sure. Kamikaze. That's what I mean.
We're done anyways. Burn the bridges.
I mean, that's not how I have something called integrity, and I genuine desire to see Canada improve rather than my ideological underpinnings that motivate me. But if I was them, I would absolutely do scorched earth policy or some kind of kamikaze routine. I mean,
okay, so let's hope Rich never gets into politics for the good of all the earthlings out there. We're still down here. Rich is up there. I don't think any political party would do that. But what I would suggest,
I think they would try to pass through like ideological bills that they say, hey, you know what, like. In their view, they'll say for the good of Canada, when we're out, at least these will be already implemented. Like,
I know, but that's what's already happened. That's how we got here in the first place. I would imagine. right?
Anyway, what was your point, Keith? Get back on.
Well,
this.
I think, yeah, what this is what I would do. And if anyone with the red shirts are listening right now, first of all, you have your leaders step down, you call a leadership convention, you figure out who these people are who could potentially, become the next leader of the party. And there's a few names out there, of course. Once that is done, we would realize very quickly that the new leader we have is still unlikely to lead us into the next victory, into the next election of next year. So then I would say, then let's call the election immediately. And the reason you would do that is then you're handing over the keys, to the House, to the blue shirts.
I see your point now.
Yeah. And then they get on with it. Because remember, we're now playing the long game, Rich.
Or are you just leaving the
It's
blue
the
shirts?
long con. Yeah. We'll go back and do you remember the Paul Newman movie, The Big Sting? Or
I
The
love
Sting?
that film. That's a great film.
Yeah, like we're doing lots of things today with movies. And Rich, Steve is like, oh God, don't go down that road. But yeah, like you basically turn it over. You know what? Like you were entrusted by the voters of Canada, and you had a great run. You did what you thought should be done. You did it. And now, the big long cycle is over, because the blue shirts had a very long run. Their cycle ended, then the red shirts came in, and they've had theirs, and it's over, guys. Right? You need to admit that. But then right now, I would argue that no matter what the blue shirts are going to do when they come in, they're walking smack dab into the exact same, the geopolitical, the fiscal and the monetary constraints that we have going on right
Quagmire?
now.
How about quagmire?
Quagmire? Yeah. What other words can you come up with? What else do you think?
It's shit sandwich.
They're being handed a flaming bag of shit.
Yeah, it's what it is, right? So that's what I would do.
Don't put it out with your boots, Ted.
But I wouldn't go scorch earth at all. I mean, if you know me, I wouldn't do that.
No, I wouldn't do that either. But you asked me what I think will happen, and I think that's what will happen.
Yeah. Well, we'll see. Maybe they
Do
don't
you really
do what
think
I
they
would do.
that, though? I still think, well, many of these politicians may be well-intentioned. I still think they're financially motivated to collect their pension checks and delay this.
Yeah.
We'll
Keith,
see. Maybe it's a Twinkie bet. We got a Twinkie bet here. Then why don't we do this?
Why isn't the NDP Jagmeet Singh not said, "Hey, man, this party's going down fast. I need to jump ship and get the hell out of here." But
well, if you think about it, I don't think he's on any committee in Parliament whatsoever, is he? Even though he's the leader, and did he get any position of power with the coalition?
I'm just shocked at your lack of. I'm maybe we should try to find one. Maybe we got to invite somebody on to square us up here. But Keith, I'm shocked at your lack of cynicism. I don't know where it happened today. Did you have like a lemon loaf or something, or
the carbs are getting to his head?
Anniversary dinner with Mrs. Icecap or something happened. You're so cynical, and now you're telling us that that Justin Trudeau's gonna step aside and let them do the right thing for the country. Oh, buddy.
Well, no, it's a difference. I didn't say he was going to step aside.
We'll have a leadership convention.
Three of us are saying, dude, you are stepping aside. Right? But again, I think with all this stuff, there should be a measured approach with it. And if you make it a very logical one, which I know, you guys are, it's very easy. Can we win next year? No. Right? That's the bottom line. Yeah, what can we do to improve? So what can we do now to improve the standing? You need a leadership convention, right? Because you already have MPs that are coming out now in public, calling for, the resignation to take place. And so why don't we do our own Twinkie bet here now on how long before the current prime minister retains? Should we do that, or is that just not a Loonie hour thing?
We can do whatever we want.
Okay, so we'll put Steve down. He placed for the full term.
I think full term, man. I think they want their pensions.
Yeah, me too. That's for me. I think the full term plus 8 days so that they can get their full pensions.
That does sound the most logical, right? Absolutely. But I'll take the under on it. I don't
Okay.
think that happens at all. So yeah.
All right.
Okay, let's move on to something else then. That
All right,
was
I was sick of these politics. Keith, what's going on in markets, man? We're heading into the dog days of summer here, but it still feels like there's a lot that's kind of brewing. It feels like some of the data is kind of rolling over. Markets kind of look a little bit kind of wishy-washy, a little bit all over the place. You got the Japanese yen still shit in the bed.
Yes, we have that going. I know a few days ago I said on Twitter, hey, like people forgotten about the yen, watch for it to heat up again. And then, the BOJ must have saw my tweet and, they came out to try to jawbone it, to strengthen it. Yeah, but just pick up the chart on yen that continues to go down. But so we're almost halfway through the year. Q2 is almost over here. And but what's continuing to capture my attention and our focus here, it is credit markets and debt markets, because if we get a slowdown in the economy, I think we're going to experience severe losses in the bond market. I mean, and the reason for that, because the economy slows down, households, governments, and corps have less income coming in to service the debt, and there are losses. There are going to be some losses out there. So I mean, we've already talked about the private credit story, there a few weeks ago, and and then Loonie hour fashion, like literally hours later, we had that big announcement from a firm that's selling a lot of the private credit funds. But what's catching my attention here is this morning, so the Bank of England, they've come out with some pretty strong comments about private equity. So private equity is the stock market that doesn't trade on the stock market. The private companies, but a fund will borrow a bunch of money. They'll buy a company, take it private, and then try to turn it around because it has so much leverage attached to it. When they sell it, they're able to get a higher return, on their investment. But this is specifically now from the Bank of England. So what they're concerned about is that, because increasingly more and more investment has gone into private equity as well as private credit. Their concern is that because rates have gone up so much, it's now more expensive to borrow, that a lot of these private equity investments, they're not actually worth what the valuation is, what they're holding it in their funds. Because we've talked about that before as well. So they specifically say, this is the Bank of England, and I can't do it with Rich's English accent. That would be good if we had it. But here we go. That leads private equity firms into more unconventional approaches, such as borrowing against their fund's net asset value and then restructuring ownership of their companies. So remember, they've already borrowed, bought a bunch of stuff. Now they're putting it collectively together. It's like the Big Short theme, right? The CDOs and the CMOs. So they're borrowing more on top of that. And then they say layers of leverage exposure, lenders to risk at the portfolio company level and at the fund level and at the investor level at the end. So again, you're trying to get out, it's going to be tough. And then the final thing they say, the Bank of England said that UK private equity funds were also vulnerable to shocks from, you ready? Overseas, since most of their funding comes from global investors, and said that international policy work on private equity risk management was the key to follow, not necessarily UK markets. So this is something that you've talked about, Steve, now quite a bit recently, is that, maybe the risk to Canada comes from outside. There's the Bank of England saying the same thing. But again, if we get a downturn in the economy, a lot of these private funds, whether it's equity or credit, they won't have any liquidity to get out. So this is something that, we're looking at very closely, and we're kind of excited about it in that insensitive way, because it should create some really cool opportunities to buy this stuff afterwards. And that's what I'm watching, Steve. You asked the question.
No, it's it's a developing story. I mean, much like the Japanese yen. Keith, I'm kind of curious again if you can kind of walk us through that. Like, I was looking at a chart here from Bloomberg saying the Japanese yen Against measured against the US dollar is down 12% this year. It's the worst performing currency, worst performing major currency. It's like, it's worse than the Brazilian real, the Argentinian peso, the Turkish lira, the Chilean peso, the South Korean won, the Mexican peso. Like, there's some real crap that is outperforming the Japanese yen. So again, what is exactly going on there? How are they going to fix this? I mean, correct me if I'm wrong, but they basically have to sell a whole bunch of their U.S. Treasury holdings now.
Yeah. So yen is down 35% since the end of 2020.
I think it's down like 50.
No, more,
down like
more,
50% since like 2019.
Yeah.
Well, I'm just going to the 5-year chart here. But it's down a lot. And as you said, this is not an emerging market currency. Like, this is one of the world's major currencies. And think about like Canadian dollar volatility. If the Canadian dollar dropped 30% over a couple of years, right now that would bring it down to about 49 cents.
And people will be losing their shit in Canada.
Yeah, they would absolutely be losing it. Absolutely. Are the Japanese losing it?
No,
I don't know.
They're not, because it's a different economy. We've argued about this before. I mean, I think I got to jump in here. So Keith, I think you're right. I think it's obviously the Japanese yen at 160. That's obviously an indictment. And I think what's even crazier is how it's decoupled from long-term bond yields. So for a long time, you have the Japanese yen would go up, so weaken, and the US bond yield would weaken with it. And that correlation is really, really important. And to support Keith's point about how maybe this time is different, you're having 10-year bond yields are in the 430, 440, whatever, 450 handle, and the yen has decoupled. So saying that, people, there's worries about growth maybe going forward. And normally when there's worries about growth, people tend to pile back into the Japanese yen. It's perceived as a risk off currency. So it's like, and that hasn't happened. That's like, point into your favor. The point to my favor is that Japan's economy is geared in such a way that it has no external debt. E.g., it doesn't owe anybody outside of its borders any money. That's a very, very important factor when you're thinking about a currency crisis. And number two, they just generate so much revenue outside that current account balance contribution. So all this assets that they own in the US dollars, on US soil, in Europe, in China, whatever, generate enormous amounts of inflows to their currency. And so, and then when you have inflation at 2% in Japan, not 4, not 10, not whatever, I think it's different. I reject the idea that it's a crisis. I think it's definitely something worth watching.
I think you need a bit more oxygen up in your little UFO. You're flying around it. So here's what's really happening in Japan.
Okay, sure. Tell us.
Tell us, old man.
Yeah, the old man. Yeah, the old man meme. Some guy sent me a mean email. He said, "Oh, you're blah blah." But the stories that go near
babbling turd.
Yeah, the babbling turd. But here's the deal: like, the Japanese have, they've borrowed so much money over decades now, with the entire goal to keep everything going. Like, that's the goal. And they've now reached the point where they have to make a decision. They can either save the currency or save the bond market. That's
right.
it. Only two options.
Right.
If they save the currency and then, by default, they don't save the bond market, banks go under, insurance companies go under, pension funds go under. And then the fourth group that goes under, and they're the most important one for this, politicians go under. The government goes under, right? And those are the guys that don't want to lose their job. So, of course, by default, they can't let the banks go under, or the insurance companies, or the pension funds, and by default, the government. So therefore, by default, all this risk that's been tied up now in the bond market in Japan is now getting reflected with yen. If they let the bond market float, so there's no more QE, no more money printing or interference from the Bank of Japan, that includes buying equities as well, all this stuff. What is the true rate of where should the yield curve be? I don't know the right answer. Nobody
No one
knows
does. Nobody
because
does.
it's been artificially suppressed now for about 3 decades almost. And it's to the point, you just give up. So as long as the yen just continues the trend in one direction, in this case, it's lower, then, the world will, cope with it, will react to it and whatever. But at the moment you get a large sudden, jerk in one direction or the other, that's when someone can get pushed off sides. So yeah, the yen is this slow motion train wreck. It's a one-way street effectively right now. And it's going to have some recoveries and stuff like that based on other, external factors or events that happen. But let's just say this is the road. Canada could easily go down this road. So can the Aussies, definitely the Europeans, and
But
same
what's the
with the
main?
Brits.
But
And
wait a second. But and just to reiterate this point, which you seem to ignore constantly, Keith, is what is the main difference between Japan and all those other economies? Japan's debt is owned domestically. And so they can. That's the big difference between the US, Europe, certainly, Australia, all this stuff. They don't have they only owe their own citizens a homogenous, very wealthy society with enormous assets offshore. And I think that is a major counterbalance. I don't disagree with you that the yen's probably going to hit 200. But when 95% of their debt is owned domestically, they only have themselves to answer to. It's not like emerging market countries like China or other places that when they get into trouble, they have to go with their cap in hand to these foreign owners of their debt. They don't have to do that.
So it's two things. One, they're going closer and closer to an economic fantasy land, and that's effectively what. Because if you only owe debt to yourselves, like is the whole MMT theory, just cancel it.
Right. Well, that's
all you got to do. But let's just run through the exercise. Let's use the Canadians as an example. Say we do get a hard recession hitting, the banks start to wobble, the soul is ripped out of Bay Street. There's only one realtor in Canada still selling stuff. And we all love them, of course. But in that situation, like the Bank of Canada, they're absolutely going to run in and they're going to, print baby print all day long. So we're just at it. And there's no difference in that. All of a sudden, all the debt being issued will be bought by the Bank of Canada. Any foreigner who holds debt in Canada, they're going to sell it. Yeah. And who buys it? The Canadians, right? The Bank of Canada. Yeah. So it's all the same road. But if this happens in Canada, it's highly likely that it's also happening with the Brits at the same time, and the Italians and the Americans and so forth. And this is the visibility I talk about. So I think in Japan right now, it's easy to make an argument, oh, it's an isolated event, it's this or that. I think it's a perfect way. It's like, here we go again. It's like Back to the Future, or the Terminator. You want to see what's coming up. I think the yen is giving us a perfect view of what is potentially going to happen in the currency world. So I think it's amazing. I love this. I watch this show all day long. But the difference, though, Rich and Steve, I know the yen story is not sci-fi. It's real. I can see
Come on.
I mean, Keith, it's just kind of emblematic or a perfect summary of what we have is just this global sovereign debt bubble.
Yeah, it's not just that. I mean, if you ask me about what I'm paying attention to markets, to me, it's market concentration. So what does that mean? I mean, it's the fact that this mega cap 8, which there's like the mega cap 7, but it's Alphabet or Google, Amazon, Apple, Meta, Facebook, Netflix, Nvidia, Tesla, are now 31%, 30.6 or whatever it is percent of the S&P 500 market cap. And they've driven, I don't know, I mean, I can't remember the number because I forgot now, but the amount of earnings, most of the earnings have over the last, let's say, I don't know, 12 to 18 months have come from these 5 companies. The price to sales ratio is at 7.5%, which is very, very high. Your forward earnings ratio I mean, so you and well, meanwhile, and so yeah, the margins for these businesses are rising. But if you look at the margins for the S&P 600 or the S&P small caps or the Russell 2000, they're all flat to down. And I think that just and we've seen those things before. The last time we saw sort of that type of concentration was in 1999, 2000. I don't want to compare bubbles to what's going on now, but there's some
The other
similarities
interesting
that I think.
point, Rich, is that the market cap of those
Yeah.
7 or 11, I don't know
Yeah.
what they are anymore.
7, 8, yeah.
Yeah, they dwarf. I think it's like 2 to 3 times the entire Canadian equity market.
Yeah. They're bigger
Same
than
with the German and the French market and the UK and Japanese and everything. Yeah, it's an interesting observation,
Yeah.
right? And like this whole question about, like how long can that last for? How long can a sovereign debt crisis continue for? It could go for a while. But right now, though, it is something I think any investment manager, if you're not having these discussions and you're not, having a serious think about what can you do to put protection in your portfolios for this stuff, then, you probably shouldn't be in the business. I mean, this is a fun time to think about, these risks.
But that actually brings us to one topic we've skirted around. We've never discussed it. I know we've discussed it sort of offline, but about career risk and a lot of what investment managers have to deal with, especially at the big companies and the bigger which is like if these 8 stocks, which are extremely, mind you, they are earning lots of money and their margins are rising, but they are very, very expensive in a world where you're seeing weaker growth. But if you don't own these 8 stocks, you're massively underperforming your benchmark because they have, in effect, have become the benchmark basically. And so, I think, investment managers, Keith, I mean, they get pulled into these otherwise, let's say, kind of hairy investments because that's where the market's going. And to be fair, it's done super, super well for you the last, 18, 24 months, right? This, NVIDIA is up 155% over the last 12 months or whatever it is. So, or sorry, year to date, excuse me, is up 155%. That's crazy. If you didn't own that stock, then you've massively underperformed. And so, but as it carries on, more and more people get sucked into this. And then, because you don't want to be left behind and compared to your benchmark and your peers, I mean, how does that career risk affect decision-making of portfolio managers?
Yeah. So I worked for one of the big Canadian banks in the 90s. And we had a guy that was managing our US equity fund. So it was late 90s, like 99, everyone's buying Cisco and Nortel and, all this stuff. And this guy refused to do it. He refused to buy this stuff. And as a result, the performance of our US equity strategy, it was not great, right? It was a struggle. So, everyone basically gathered the pitchforks and chased this guy, out of town, right? And then they put in a new guy, and yeah, everything that people wanted, he bought it. He bought that shit up, man.
He hit the
Meanwhile,
button.
he was buying all day long. And meanwhile, basically 18 months later, the old guy who they chased out, he was somewhere just sitting there just smiling, right? He didn't say it, but he's always saying, I told you so.
Was that old guy you?
No, I was a young guy then. That was like 60 years ago. And but Rich, you are right. You have this career risk. But the biggest problem with the industry today in the investment world, the industry treats everyone as if you're a pension fund. So relative return. So if markets are down 30 and you're only down 20, man, you did great.
You get a bonus. Not only did you do great, you get a huge bonus.
Yeah. Meanwhile, like, mom and pop in Saskatchewan, they just lost 20% of their money. Right?
Yeah, but they outperformed, Keith. Keith, they outperformed.
They don't care about that stuff. So I just, again, like these are the things that I just love about the industry today and the market. I think it's crystal clear to see where everything is headed and when you're going. And the better able you're to see this stuff, it just, it helps you to have less of these shocks. But, they call it CYA, cover your ass, career risk. And you're right, Rich, it's a big, big deal. But I'm sure it's the same thing in the healthcare profession. real estate world? No.
Yeah. Does that happen? I mean, I guess if you're working for a bigger firm, right, Steve?
I mean, yeah, I mean the commercial real estate space is such a different realm, but I mean obviously everybody's playing along, right? Which is like you have dollars and you have to invest it, right? So I mean if it's a 2.5 cap, just that's just what the market is, even though that doesn't make a whole lot of sense. But like if everyone else is buying at 2 and 3 caps, then you're head first into it as a massive investment firm. So
Yeah, interesting.
Canada pension plan, baby. All right, I think that's a good place to wrap it up. Yeah, happy Canada Day long weekend coming up. Hopefully our listeners here are taking long 10-hour road trips in the car, burning up the planet. But no, seriously, hopefully everybody gets some time away with family. It's yeah, it's a great time. Like I said, it's one of my favorite long weekends. So I'll be enjoying it. Keith sipping some vino in the Okanagan there. I'll be
Cool.
thinking about you. Some nice
Good,
Pinot
man.
Noir.
Good. Happy Canada Day, guys.
All right,
Yeah.
guys. As
Take it
always,
easy.
appreciate the support. See you next week.